Right, Seten, let's see what you pick out of that lot.
No, perfect. You saw a day where Comair reported results and Brait came through as well on it. And what you've seen from the likes of Comair is a strong operational results come through. But the market looks at the elephant in the room, which is the dividend. As investors, you're looking at a cash cow producing so much cash at the moment, not paying a dividend. It's a bit of a concern to investors. But at the end of the day, we think they probably did the right thing in a tough market because they announced the unit cost of $29 per ton. If it's the FOB cost, you're looking at possibly all in about $42 per ton. With the iron ore price of $92 per ton, they're making tons of cash. But I think they, along with investors, believe that that $92 per ton is actually unsustainable at these levels.
Yeah.
So as a company, they've probably taken a more prudent stance and pulled that back.
Yeah. We spoke to the chief executive earlier on today, and he said exactly that. They burnt their fingers a year to 18 months ago, and being a one commodity operator, you can't afford to take a chance. And of course, I think psychologically, investors are still remembering the mid-2000s when they just churned out money.
No, of course, but I think the elephant in the room for them is that the Pacific operators can actually produce at $25 per ton all in, while in South Africa, we're still at $42, $43 per ton. So balance of probabilities. If China can hold up its demand, I think a $100 iron ore price is realistic. But in the long run, as China's housing market starts slowing in terms of the construction build, we could see these prices come off towards the winter months in China.
Well, they did slim down, cut costs, something like 30% of their people they had to let go. So they were well positioned, but you're saying still costs are too high in terms of competitiveness. I
think globally we cannot compete with the Pacific operators, and although they've done so well on cost this half, we must remember their stripping ratio, they cut by 42% year on year. So chances are in the following 2 years, unit costs could go up based on the operational efficiencies that they've got through at the moment.
Let's have a look at Brait, which is always interesting. People have access to underlying companies through Brait, and of course it's always interesting what those companies are doing.
Yeah, Brait announced the NAV down 22% for Q3. If you look at the operations, New Look was the one that actually suffered. That's the one that's gone from number 1 or 2 in the portfolio to number 3 as of this quarter. Virgin Active, Iceland Foods is showing a decent recovery. Virgin Active also hit its numbers as well as Premier Foods. So the rest of the operations are doing quite well. It's just that New Look operations that are suffering. And of course now, being a clothing operator in the UK, the importing costs as the GBP has basically lost ground since Brexit.
And what about this rather unexpected turn? We are not accustomed to having a fairly strong rand and a fairly weak pound. I mean, this is the reverse of what it usually is.
No, exactly on your point earlier. I mean, we saw the rand break 1320, which is a strong technical level. It went to 1310. The next technical level is 1305 and then 1290. So the rand strength is something new since 2015. We were used to a weakening rand and rand hedges outperforming. 2016 is a very good example of what can happen when the rand doesn't weaken. We saw the all share for the year go up just 2.5% to 3%.
How's it affected Brait then at this time?
No, it has tremendous effect on Brait, given how big New Look and Iceland Foods is in the actual business for the company.
So in terms of valuation and whether you buy this share now and whether you hold it?
Interestingly, when Brait's announcement came out today, the initial reaction was it lost 2 or 3 rand, but it actually closed the day up 1.2, 1.3%.
Oh, there we have 1.34% on the chart.
Yeah, it actually closed the day 1.3% up, and investors are looking through this and saying, you know what, this might actually be the dip where you pick up Brait in its absolute lowest levels.
Right, let's leave the overall market there and then home in on a particular sector, that's the airline sector, and we have Erik Venter, the Chief Executive of Comair. The airline today revealed its return to historic profit growth in its interim results, and it sees more opportunities to grow: travel, flight freight, training facility, catering business and airport lounges. Evening to you, Erik. I was saying to someone the other day that this company has been going since 1949. And it's an unbroken record of profit, which in an uncertain sector where there are things you can't control. So it seems you keep doing things right. What's the latest evidence of that?
Well, I think we are seeing a very flat passenger market right now. We definitely see that passenger market growth is very closely linked to GDP growth. So for the past few years, we really haven't seen viable growth in the passenger market, which is quite sad. But fortunately, as you mentioned, we do have a few other businesses that are performing well, and at the same time, on the airline side, we have really been driving some big efficiency gains. So as we've been replacing the fleet, we've been seeing those operating efficiencies coming through very effectively. And that, along with a slight recovery in exchange rate versus last year, certainly helped a lot in mitigating any kind of domestic inflationary pressure. But maybe the big factor in the year-on-year comparison is really that we had that big collapse of the exchange rate towards the end of last calendar year, and that just hit us at the wrong time with having to revalue a dollar loan on one of the aircraft. So last year we had to write down 91 million to the income statement, but it wasn't a cash flow item, but it did break our trend of profit growth. So we're really back onto that trend again of nice consistent profit growth. And that's where we continue operating.
Also, this year's numbers, the ones just out, are looking better because you had that dip last year. There was a purchase of aeroplanes, so you had some one-off big costs there.
Yeah. Now, the cost of those aircraft were obviously a capex cost, but the benefit of those aircraft starts coming through, in this year. But it is a tough environment, no question about it. I think if you look at it globally, it's not really any different for aviation. We've seen over the last 40 years, the real cost of air tickets has come down 70%. So clearly, aviation is not about expecting to earn your revenue growth. It's about consistently driving efficiencies. And that 70% drop in real cost per passenger has just come through efficiencies in the industry. Now, the trick is who can deliver the best efficiencies. Those are the guys who come out ahead.
Yeah. Seten?
Yeah, you're seeing similar capex investments from your competitors in the space as well? I mean, driving efficiencies because oil price and actually limiting your fuel usage is so important.
Not really. Obviously, I think everyone knows the stories behind SAA's fleet replacement dramas. So there's still a lot to be done there in terms of catching up with Comair fleet efficiency. And the other operators in the market, I think are struggling a bit with the cost of new aircraft. Obviously, with the exchange rate where it is compared to a few years back when we were bringing aircraft in at sort of 9 Rand to the dollar, it has become a very expensive asset to bring in a new airplane. We're talking about $50 million per aircraft. So you have to get onto this sort of virtuous cycle of bringing in the assets, achieving that efficiency, delivering the cash flow so you can bring in the next asset. And to get onto that cycle is difficult. But having been in the business now, not myself fortunately, but the Comair have been in the business for 70 years, it's taken a long time to build ourselves up to that point where we do have the economies of scale, we do have the cash flow generation to actually keep sort of accelerating the cycle of moving into new technology all the time.
What worries you most about the sector and the way the global economy is going now?
The big challenge, of course, is just where do you find the next efficiency? Because, as I mentioned, with the poor economic growth at the moment, we're not going to see just a guaranteed fair increase every year to cover cost escalation. But at the same time, we are in a fairly high inflationary environment in South Africa. But it's the same situation we've had for a very long time. It's not something new to us. We've managed to produce 70 consistent years of profit, which quite often people come to me and say, but it's a high-risk industry. And I say, where else have you invested in a company that's never made a loss? Is it a risk? Maybe the industry's a risk, but there are players in the industry that have managed to remain consistent.
Are there any others who have maintained such a record?
Not that long, no. We've had airlines that for a few years have made profits, but typically they go through a bad patch or a bad cycle and not enough forward planning, or trying to take profits early and immediately rather than sort of postponing the benefits and taking pain up front, but looking at longer term. So we do see many cases of airlines that do quick fixes, take the profits immediately, and then a year later they're in trouble again. But that's the danger in the industry. You just can't take the quick wins. You have to plan long way ahead.
As investors, I mean, we think the oil price is important to us. I mean, that's substantially more important to you on your side. I'd love to see your view on how you see the oil price playing out in the next 2 or 3 years.
I think we are going to see a slow increase. I think the rate of new oil production and exploration, etc., especially outside the Middle East, has slowed down fairly dramatically. And these shale producers don't have a very long life. So eventually it will get to that point where there will be a slight decrease in production outside of the Middle East, and then I suspect the price will be moving up again. Now we are already about 2.5 years from the drop in the oil price, and some of these shale producers only expect to get 2 to 3 years out of a well. So I think we are on the verge of seeing a slow increase again in the oil price, and the forward prices for hedging purposes reflect that. So there isn't much point even in hedging, because you're basically buying forward at the price that you expect you're going to end up at anyway. So I think that's where it's going. We're not really concerned about it because at the moment, we probably have the most efficient fleet in the industry in South Africa. So a high oil price is almost a good scenario for us from a competitive perspective, which is a little bit bizarre. I wouldn't have said that many years ago. But today, a high oil price is almost a competitive advantage for us. So we're quite comfortable with it. But yeah, look, you don't want to drive up, you don't want to drive costs overall, because like I said, in the current economy, you've got to try and deliver very cheap seats to keep the volumes there.
Let's talk about the bigger picture here. And I know you've had your issues with SAA and the way that they are backed and subsidized. And for me, one of the elephants that wasn't in the room, if you like, in the State of the Nation address was governance at state-owned entities. And some of them have really had big governance problems, the SABC, SAA, resignations of directors, directors not replaced and so on, controversies over chairman. And it doesn't appear to be getting any better. I mean, you've had this feud, a commercial feud for a long time with SAA, and it continues, doesn't it? It
does, and but what's changed in the interim, in the last year or two, is that historically we had a real commercial battle with irrational commercial behavior within SAA and anti-competitive behavior and all these kind of matters. But in the last few years, we've actually seen such an exodus of skills out of SAA that it's almost stagnant now. We almost don't even have to worry about it anymore. We just don't see the responsiveness we used to see. We don't see the inventiveness in terms of anti-competitive conduct anymore. It's just become very stagnant, and it's really a non-event anymore for us. So whether they receive state funding or not, it's largely irrelevant to us these days.
Do you have an idea of market share that you've taken from them?
Well, it's difficult to say on a sort of a short-term basis, because obviously SA Airlink and Express are all compounded into the SA numbers because they're all sold on the same code. But I think one has to go all the way back to 2001 with deregulation of the domestic market, when SA had 98%.
Yeah.
And today, that accumulation of SA, SAX and Airlink is at around 40%. So, you know, people talk about they should privatize SA in the domestic market. Well, in a way, 60% of the market has been privatized.
Yeah.
Just through
efficiency and performance. Yeah. And last question for you, Erik. We ask all the CEOs this time of the year. We've got the budget coming up. You may have a particular interest in what happens in your sector, but what are you expecting? Any particular things that you'll be looking for when that budget comes out next week?
Look, there's going to be a huge amount of pressure, I think, from every department in government, and we particularly see an area that's affecting us specifically is Home Affairs and immigration officers. Both the officers abroad to apply for visas, as well as the actual immigration officials and entry points at the airports, and being unable to man them due to lack of budget. So in our case, we actually would like to see that go ahead in terms of funding the requirement for immigration officials. But on the other hand, it is going to just exacerbate the pressure on taxing where the money is. And so I do think wealth taxes, etc., are going to keep escalating, because one has to fund this inflationary environment. So yeah, a little bit sad, but there are specific areas in government that we do need to see some funding going into to promote stimulation of the economy. Yeah,
nothing worse coming off a flight and then you have to wait to be processed when you come in. Well, that ends our interview with Erik Venter, the Chief Executive of Comair.